In this video, we're going to talk about the price action trading strategy that's known as the 1, 2, 3 trading pattern. Stay tuned. Hey traders, a very warm welcome to you. Okay, price action only trading strategy on the Forex pairs. But we can also use it on the indices, but let's focus on currencies for now. We'll look at it in some detail as well on the indices. Okay, go. So this is a price action trading pattern. And let me just draw kind of on the chart what this is all about. What I'm going to do is I'm going to flick it so we've got a bit of a clean area to draw on. Okay, so this 1, 2, 3 pattern looks like this to the upside. We have number 1 here, which is a low that's formed after a downtrend. So the low has formed on there. We're in a downtrend. We're now looking for a reversal of that downtrend. We get a little push to the upside. That forms number 2. That is number 2 in our pattern. So it's a high that's pushed after the downtrend. So you can imagine at the moment we're just a V shape. Now we have the third part, which is the push down here. Now this is number 3, and you can just see that's a 3. If I just draw it right, there we go. That is the 1, 2, 3 chart pattern. Now, what we don't want to see is we don't want to see price moving down below the level of 1. If it does, it's negated. It's not a 1, 2, 3. It might be a double bottom, might be something completely different. We're not worried about that. We just want to see that pattern. A low, a high, a lower high put in, and then we get a break of the level of 2. Now, I realise some of you watching this are going to say, hey, that's not how you do 1, 2, 3. There's different. There are different variations of it. And like all trading, guys, there's no right or wrong way. If you're making money with one way, then just stick with that. You know, don't add another flavour in that's going to upset the apple cart. Would I'd love to hear comments below as well if you use this and how you utilise it. But that's generally what you're looking for. You're looking for, you know, the price action that says, hey, we're at a low. You know, the supply demand shifts. You get a little bounce back up. It tries again to go to a low, and then it stalls earlier than it did last time. And that's the kind of tipping point where you say, okay, things might have changed here. We might actually have a reversal in play. And then you're looking for it to continue to break above the high, indicating, yes, I'm ready to go. And what you would do is, if you were a conservative trader, is you would go long on that bit there. So I'm going to draw long, but you get the point. On this area here is where you go long. You put a buy stop to get in above that high. Or, you know, if you're a little bit more aggressive, you could kind of see this pattern play out. See the low put in, see the high put in, see the low number 0.3 put in, and then see it start to creep up and say, you know what, I'm going to have a little earlier go at this. Obviously, there's a pluses, there's negatives, and there's positives and negatives to this. The positive is you get a head start on it. You're not chasing the market. And if you're right, you know, you've got a lot more meat and a lot more juice in the trade as it goes your way. However, you know, you're going to be wrong more often. You're going to get stopped out. It might not be clear cut. You know, at the end of the day, this looks very clean on this chart, but you might end up getting sort of this grubby low, pushes up, pushes to lows, and goes again before it finally breaks. So that's a decision for you to make as a trader of how you want to do it. So let's look at a real world example, guys. Let's go into US dollar CAD. I've got a 4-hour chart here. I'm going to pick one from the currencies, and then I'm going to pick one from the indices. Now, not the crispiest, cleanest thing, but it's still genuine. We have a downtrend here on the 4-hourly, and that forms number 1 is our low point here. Okay, now number 2 we get is this high formed pretty much at the open of the next day by the look of it, or the close of the day. Number 2, there's a formation. Now we get number 3, which is a low forming here. Okay, oh, my 3s don't look very good, but you get the idea here. And then we get the confirmation, and we're long as it breaks above that level there. That's my imaginary line. So point 1, the low after the move down. So heavy move down from that 126 level all the way down to this 121 and below. Little pullback up, and sort of looking at it perfectly, you're probably going to want a bit of a deeper push back up. But hey, you know, you can work with what you've got. Same with the number 3 level here. You don't really want it. You know, the further it's going closer to that number 1 level, i.e. the low, the less sort of powerful it is. If it's halfway, that's a kind of good level to look at. And ultimately, you know, if you're looking at the bodies of these candles rather than the extremes, it is about halfway. I think you want this number 2 being a little bit higher, but it's kind of a broad pattern on here, and it's showing you approximately what it is. So you'd be buying there, and then of course you're looking for a move to the upside. Now let's look at a daily chart on a FTSE and see how it would have worked on this one. So again, we've got a downtrend moving here. It puts in a low down here. Number 1 is our low. It puts in a high point here, which is number 2. This is the counter trend drive up. Pushes down again. This is number 3. So we're now, yes, we're confirmed, and then we're buying if we're using the conservative method as it breaks above that point there. Okay, now one way of doing it obviously is if we're buying that, that's great, but one way of kind of targeting where we're going to take profits is to measure the difference between this low here and this high here. So point 1 and 2, the difference between those, I'm just going to approximate this. It was 5400 and 4800, so 600 points or so. And then you'd extrapolate that out and say, okay, when I'm buying a 5400, my target is going to be 600 points above that, so 6000. So your target would be here, so you look to take that. So that's one way of kind of framing the trade and taking the distance between 1 and 2, adding it and creating sort of 3 to 4. But obviously, that's up to you to decide. Trailing your stop up, using some sort of fib extension, scaling some out. They're all perfectly feasible ways of doing it. Anyway, that's the price action pattern of the 1, 2, 3, guys. Very versatile, very simple, very clear, but it's showing you supply demand shift, back in a little counter trend move, shift again, then changes a little bit earlier than before, and then for that extra confirmation, waiting for it to break above the high. Good trading, guys. Take care. I'll see you in the next one. Bye bye.